Hello and welcome to the Crux Informatics Supplier Spotlight. I am Dan Ostermuller and I'm the head of supplier relations at Crux. Joining me today is Noel Freeman from MSCI. Noel, about a year ago, you joined us at our Data and Sustainability Summit, but for anybody who missed that, can you introduce yourself and your role at MSCI?
Sure. Thanks, Dan, and great to be here. And I work in the ESG business of MSCI and focus on two areas. I manage the ESG products for the Americas region, and I also work on or in charge of partnerships and distribution for the ESG business.
As you know, at the time of the summit last year, ESG investing was getting increasingly popular and the momentum continues to accelerate. We're seeing a lot of demand driven by asset owners, regulatory requirements, as well as asset managers trying to differentiate themselves. Noel, can you comment a bit on the trends that you've been seeing that were present last year and anything in particular that you've seen over the last 12 months that has added to that increase in demand?
And I think I would sum it up maybe in a handful, maybe three trends. I think reporting. So it's not just the internal sort of use of ESG information and integrating ESG into the investment process, but the growing need from asset managers to be able to communicate how they're integrating ESG to the investment process, and with that, talk about the ESG characteristics of the portfolio. I would say the other area, sort of as scrutiny of sort of asset managers has grown and investor expectations have increased, it's a demand for ESG investing, ESG integration across all their asset classes, across their total portfolio. And, so that's not just equity and investment grade bonds. We've seen growing demand for hedge funds, high yield, bank loans, real estate, private assets. Over the last year, we've built out solutions to respond to some of those, like bank loans, high yield, and then have are developing products in things like private assets to help meet this growing demand for the total portfolio. I'd say, sort of second trend is really climate. And I think we've been amazed at how quickly climate has sort of moved front burner. And we talk about our business now just as ESG, but ESG and climate. And sort of the again, sort of investor expectations, not just for ESG integration, but for climate risk integration. So the expectation that their asset managers are going to be integrating climate risk, running scenario analysis, understanding the physical risk exposure of the portfolio, transition risk if there's growing regulation, what's the impact going to be if there's regulations to try and get the market to a 1.5, 2.5 degree warming world. So, and there's a lot of investor initiatives and coalescing around frameworks like the TCFD, Task Force for Climate-Related Financial Disclosures, that have really set those expectations, created a common language, and really kind of accelerated how important climate is to the conversation. And then the last thing I would say, kind of related to regulation, I think the specter of more climate regulation from markets that maybe we weren't expecting regulation from a year ago, like the US market, to regulation that's not just regulation that might be coming, but regulation that's on the ground now. The EU Sustainable Finance Regulation has put some very specific requirements on asset managers that operate or sell products in Europe to communicate a very specific set of requirements across all of their investments, to talk about their alignment to sort of a greener taxonomy to try and funnel capital to more sustainable companies.
We certainly see that quite a bit at Crux as well, where these new regulations are spurring asset managers to request more data and then assistance with the delivery and management of that data. And so that's where we've been able to work together with you at MSCI ESG quite a bit. Obviously, that there's a lot of new entrants coming into the ESG market. Lots of firms are developing ESG products that cover a range of issues and use cases. What is unique about the MSCI ESG offerings? How do you differentiate yourselves, and what new products have you been developing, particularly over the past year?
Yeah, I think one important differentiator for MSCI's position in the market and the need for all players in the ecosystem to have a common language. What is ESG? And there's still a lot of debate. So having that common language between asset managers and their investors, between the due diligence teams, as you're talking about, finance, structured finance, structured products, ESG linked loans. MSCI has really become that common language because we work with the largest asset managers, the largest investment consultants. So having our ratings and our climate data be that common language across the ecosystem, it really helps, all the players. In terms of the product themselves, I'd say, there's sort of really two areas that I would focus on that kind of differentiate our products. One is around the focus around materiality, economic relevance, gearing our products towards investors who have goals that are thinking about ESG as a way to enhance long-term risk-adjusted returns. So I think being aligned with what investors are actually trying to do with ESG integration, has been extremely useful. That's what our models are trying to capture. And then, we've talked about how demand is growing, how regulation is growing, but disclosure from companies has not yet caught up. So if you're going to effectively rate and assess a company, you need a broad set of information. You can't just rely on what the company discloses. So the use of alternative data is really foundational in what we do. So getting that mosaic of information from the companies, from SEC filings, from a little bit from the EPA, a little bit from the FDA, sort of filling out that matrix, that mosaic of information, relying on not just company disclosed data is really fundamental to all of our products. And just briefly to touch on the second part of your question in terms of new products, when we spoke about a year ago, we had just acquired a firm called Carbon Delta. And since that time, we've been able to take their product and launch an MSCI Climate Value at Risk, MSCI Climate VAR product, which, as we were talking about at the outset, sort of that growing demand from investors around climate risk. So the ability to understand physical risk, transition risk, scenario analysis in portfolios. That's what our Climate VAR product enables. So we're really excited about the fact that we have that Climate VAR product to meet the emerging needs of the markets, and that we can deliver that in a flexible, easy way through Crux.
Well, in one last question, when we had you at the summit a year ago, it was by necessity a virtual summit. Here we are, both still working from home. Any insights, lessons learned, takeaways that you have as an ESG supplier, over the past year of working through the pandemic? Yeah,
I think like probably everybody else, we realized that you can run an ESG business from home. But I think, apart from that kind of obvious conclusion, I think some of the things that we've kind of realized on the research side is that in certain areas, sort of the world has fundamentally changed. Taking an example like how we assess the company's relationship with their employees, human capital management. I think the need, or sort of how you define what a risk to employees is different now. It's a proximity from one employee to another, may be more important than, or as important as operating heavy machinery, or what it takes to attract and retain talent may very well have to do with sort of the flexibility of the employee-employer relationship. So I think those kind of things have fundamentally changed certain dimensions, and there's lots of areas of kind of ESG risk that have changed. I think the other thing that I would say that maybe surprised us, and just the fact that, at least at the outset of the pandemic, the market turmoil, but still, it disrupted everybody's day-to-day business. But the demand for ESG data, ESG solutions, the demand from investors for their managers to be integrating ESG it's only increased. I think we thought maybe there'd be a hiccup, maybe a more bear market, at least temporarily bear market might have an impact. But I think it's just a sign that kind of ESG investing is here to stay, that even in a pandemic that's disrupted just about everything else, the demand for ESG solutions hasn't really been disrupted at all.
Well, great to hear that you have been hitting this, trend in stride, and I assume that those trends are going to continue. And so there'll be plenty more offerings for you to keep working on, particularly in the governance side of things with all these new working situations. So Noel, thanks again for the time. If anybody watching is interested in learning more about the MSCI ESG offerings, please feel free to get in touch with us. And we look forward to continuing to working with you and the rest of the MSCI team, Noel.